Let's try that again. Okay, welcome back to episode number 9 of Take Flight Podcast. Woo! You're here with myself, Olu, Shawal, Daniel, and Pabilo. How's everyone doing?
Happy Friday.
Real good.
Happy freaking Friday right now.
Doing well.
Good. So on this week's episode, we're going to continue the discussion and the topic from last week, but we're going to move on to properties and talk about property investments. And then we'll go on to our book recommendation, which is also going to be taken by Pabilo. So
take off, take flight with you. For we never fly, but we're flying.
okay, so following up from last week when we talked about stocks, so now that we're moving on to properties, why don't we just start at the beginning? What is a property investment, and why should people even consider purchasing a property?
Gosh, well, kick off.
No, you're P. I know you're the don on this issue, so I think you should get talking.
Well, based on what I saw on Instagram in Zurich, both of you are experts.
Nah, P's a master bunny hopper, but P,
if the viewers probably don't know what we're talking about, but there's a video circulating on Instagram of Pabilo and Shawal doing what were they doing?
Prize for whoever finds it and sends it.
Yeah, whoever finds it and sends it. Otherwise, I might upload it.
Nah.
But you got these two guys bunny hopping. So yeah, why don't we start with what's property? So the way I consider, and I think slightly different from what we talked about last week around stocks. So property and a property investment is where you put a large or sum of money into purchasing a house. This is seen as more of a long-term growth asset, which can gain value or provide returns based on two ways: either by growth of the asset, so increase in that price or capital increase, or through sort of like rental gain. So if you were to rent out the property, it's then the money that you make minus any expenses or cost out that you need to sort of take into consideration.
Yeah, and then for me, that makes property one of the most powerful asset classes to have, because you can earn in two ways. And I think it's important to put it out there. It's the most common asset amongst the super wealthy and super rich. So it's definitely something that people should start to pay attention to if they haven't already, and start to think about it.
Yeah, and I think just to add a very quick note as well, I think in terms of the time range that you're looking for to get a return, real estate or property investing isn't really the type of investment where you're looking to make a return within 1 month or 2 months. I mean, unless you're flipping a property, which probably would take 3 to 6 months in terms of refurbishing it and doing everything up. But typically it's like a medium to long-term play. So if you're looking to ensure that in 15, 20 years time, you'll financially be comfortable and you can also pass on some wealth to your family, it's a great asset to invest in.
Sure, you mentioned flip a property. For those who don't know what flipping a property is, what is that?
Sorry, yeah, it just means buying a property where you can see that you get the opportunity to buy it at lower than the market value. And then if you were to do a quick assessment before buying the property or after buying it, you figure out that, let's just say, for example, you find a property on the market for 80,000. Properties around that area may be selling for 110, 120, but these are at a much better condition. So you buy it for 80, you realize that you only need to spend 10K doing it up. And then after you do that, it's actually back up to the 120 price range. So then you'll just sell it on and then cash in on the additional profit that you make.
Cool.
So I guess, and Daniel, if someone's starting out, we'll try and keep this kind of general, because I think there's going to be a few listeners sort of purchasing for investment and some purchasing for, also it could be an investment, but they're like their first time home. Why and when should someone decide to purchase a property? When you guys first purchased a property, what made you decide to purchase a property?
Maybe to go back and give some context on, because we're all from the UK, so we're all British nationals. So understanding the UK economy and real estate makes sense overall. But in particular, in the UK, it's very powerful because if you look at sort of supply and demand, right? And so I think the stats are that the country, we have a shortage of houses and house supply. And I think the country is building like 100,000 homes when actually to keep up with the population, it needs to do 270,000. So just based on, and this is one of the reasons as to why the prices have increased over the years. I think there's a nice chart to show over the last 20, 30, 40 years, it's pretty much just been going up. So for me, the why also starts on the context in the economy. And it's a powerful place to be in because of the island like the UK.
No, thanks, Pete. So why don't we start at the beginning on how you start and go by the process of either buying a property for your own purposes or for an actual investment. So how did you guys start when you purchased your first property?
I think in terms of like any investment, before you really start to invest, you really need to make sure you save up. I think we spoke in the last episode about the importance of saving up and some strategies to start accumulating some cash. But obviously that's the number one part that you need. And I think unlike shares, which we spoke about in the last episode, when it comes to property investment, unless you're buying straight cash, another important aspect is your credit rating as well, because 99% of the time you're going to be either going into mortgages or refinancing or bridging loans, etc. So for all of these, you need to have a good credit rating. So I think
what's you guys' credit score saying, huh?
I don't know.
I mean, I've never been declined, so it should be okay. But maybe next week, if I try to apply for a big boy mortgage, they may say no. But at the moment, it's all right.
Okay, cool. No one wants to share their number, huh?
I actually don't know.
999.
You know yours. You should share yours, isn't it? So
No, it's cool. If none of you guys are sharing, I'm not sharing as well. But no, for the listeners, it's good. There's so many sites there where you can go and get an assessment to see what is your credit score. Maybe on one episode we'll all do it for each other and see and share our credit scores. Maybe. No, sorry. Continue, sure.
But yeah, so basically start saving like we've mentioned, and then try to be wary of your credit rating. As Ollie said, there's many sites online where you can check it for free, and there's always tactics that you can build up your credit score just through getting a credit card and using it appropriately, but using it for transactions, but then actually paying it off every month, having direct debits set up in your bank account, which you're paying continuously. It could be mobile phone bill, could be bills for your home. And all of these things, they do start to build up the credit rating. And then once you have a certain amount of salary, then you can try and estimate how much you can potentially take out. So that's the first step. And then after that, you're actually going into the...
Yeah, one thing I will add to that is, especially for people that are getting into property, that the hardest challenge was always saving up that first lump sum to buy the first property.
Yeah.
Because there are many times when you say, let me just spend it, man. It's taking too long to get there. I need 10 or 15%, and I'm buying houses in London. It costs so much. But what I will say is for those people that are in that position, is that will be, once you get over that hurdle and you manage to get your first property, there's a process called refinancing, which allows you to pull equity out of a particular property if it goes up in value. And so that you've almost only need to do the saving process once, because once the ball starts to roll, then you can just start to leverage your assets. So we can go into that a little bit later.
I think that's so true, Pete. Is the first time is what they say. The first time is actually the hardest. When it comes to that saving process. So when you said saving, how much roughly do you guys go when it comes to saving for property?
So it goes back to your first question on where to start and objectives. So I think for people, they need to, again, put the plan together and understand first area, location. And it's all about, you have to ask yourself the question, why do you live in the area that you live in today? And if it's based on transportation links, you're close to amenities, shops, where your workplace, you would need to find, if you're looking to rent out a property, you would need to find the similar characteristics in similar areas, which can help determine a good area to invest in.
Question P. So do you start with, because I think this is where we might be slightly different, or we might think alike on this one, but do you start with looking at a location first? Or do you start, because my advice is first sort of go into the bank and seeing what your money can do before you start looking. Because sometimes you might want to look for a property or location and it costs 300k, but a bank is not even willing to give you 300k. So when I went for mine, I first went to the bank and said, look, This is how much I earn. This is
Fair enough. Yeah,
how
yeah.
much I have, etc. What is the maximum I can get? And then I start my sort of looking process, location, working within the parameters of what I can actually afford.
No, I agree with you. That's probably the best. You probably need to know how much the bank's going to lend to you if you're going for a mortgage.
Yeah.
So maybe you can show the listeners what the bank is looking for when they lend. Like, I know there's 5 times your salary, and is that still the case?
It differs depending on each bank and what are your references to affordability calculator.
Correct.
So based on your income, your expenses, what is the maximum amount that the bank will lend you in order to fund your to give you a mortgage for? And based on different bank or different lenders, they may look at the last 3 months of your statement. Some scrutinize it and look exactly at what you're spending. So maybe your everyday costs, how much your variable costs are, how much your fixed costs are every month. Some will ask for your 3 months salary, some ask for 6 months, some ask for your outstanding loans that you may have, any loans you may have if you have existing mortgages, etc., any dependencies, so on and so forth. So they do scrutinize it somewhat heavily. And to be honest, you shouldn't be adverse to this, but you should understand what the lender wants. And if you know you're going to apply for a mortgage in, say, June of this year, start tidying up now, because you don't want to be rejected for a mortgage application, because you may have to, it affects your credit score adversely and immensely. So you want to ensure that your credit score is good standing. So when Ollie's asking at the beginning, what's your credit score? It's good to have an understanding of what your credit score is, because even opening up a bank account can affect your credit score for 6 months. Missing a payment on a phone bill can affect your credit score for 6 months. So making sure you're on top of your finances and spending within your means. And even if it means just saving a bit more aggressively for 6 months, knowing that the lender's going to scrutinize it, do that, because you don't want to be rejected for a mortgage.
Yeah.
So after you've got that amount from the bank and knowing, okay, this is how much they're willing to lend you, start looking at properties that you may have had in mind for areas within that range. And there's also something called deed in principle. So some providers, or if you're going to say a development, or some buyers like to know that you can actually afford it and not waste their time. So showing them a deed in principle to actually say, yeah, I can afford this property. But doing a deed in principle does a soft check on your credit score. So it does affect it a bit, but not too much.
Yeah, I'll just add as well. I think because we've mentioned going to the bank, but also another way that you can check is you can either go to some other mortgage providers directly. There's some companies that specialize specifically in mortgages, or if you want to make your life a little easier and you're willing to pay a fee, you can also engage with a mortgage broker as well. And as Daniel mentioned, you can do this before even looking anywhere, but this at least gives you a range of what potential money you have to play with and how much you can purchase a property for.
And I'll do a quick plug. It's unsponsored advertising. If you're looking for a mortgage broker or someone, London and Country offer a no fee advice, and they give you a broker from start to finish. And of course, it is commission based, but they let you know up front how much it would be that they get should you choose them.
We didn't talk about plugs prior to the.
Yeah. How much
are they paying you? Huh?
Trust me.
They didn't pay me.
Yo, Daniel, we need to see 6 months of that bank statement to just make sure that you're not having random funds come.
So this is certainly a great step one. So what would be our step two in terms of the processing property?
But I think even you have to understand how you're going to buy it, because many of our listeners may want to know more about the different help to buy schemes. So especially within London, you have the government created the help to buy schemes, which include the shared ownership, the equity loan, and also the help to buy ISA. And by the way, we're by no means experts. This is just sharing our own personal advice, opinions, and experiences. Should you need more professional help, seek an IFA, independent financial advisor.
Yeah. But would you recommend? Daniel spoke about the different ways to finance the property. Would any of you guys recommend a help to buy scheme?
It depends. If you're looking to get on the property ladder ASAP and take advantage of this, and you're planning your finances for a longer period of time, it could be something you could consider.
So personally, I didn't do a help to buy. I personally wasn't a fan of help to buy, just because of the fact that yes, you put a lower deposit percentage. So I think it's normally 5% of the property value that you need to save. But then what happens is the government owns a certain, or borrows you and owns a certain portion of your property. I think it's like 20% of your property. And then you have, I believe, 5 years to pay that off.
Yeah.
Otherwise, you have to start paying interest.
And of course
No, but what I'm saying is it gets you into a cycle, because if you can't pay off that equity loan within 5 years, okay.
Yeah, so if you don't, the government they'll give you that equity loan 40%, but you don't start paying interest from after year 5, which of course you need to kind of, from the face of it, it looks very attractive, but really know what your earning power will be in 5 years. Can you still afford it? In London also rises. So it means you have to pay off your equity loan before you can actually get any benefits from selling a house.
Yeah, I guess that's, you don't have the flexibility. I personally think you're more tied in and reliant on sort of the government with that, and there's just additional costs that you have to take into consideration, especially if you sell the property or after 5 years when it comes to paying back that equity loan.
There are definitely advantages of it. For example, you put in a small deposit, but then the government will have also a big stake.
Yeah. My recommendation, just as I listen to that, I would challenge people to challenge themselves on saving in their personal finance, and try and perhaps do it in a more traditional way, which is look to put 10 to 15% down. And there are many different creative ways within property you can actually raise and speed up your savings. So you can source properties for other investors, lease options, rent to rent, which we can get into at a later stage. But the thing about this Help to Buy is, in essence, you're in a partnership with, when you buy a property, you're already in the partnership with the bank, so you're on their terms. But in this instance, you're on terms with also another person, which is the government. So I don't know. It's just it's an option, but I think what I find, because I'm also thinking the type of people that would go for Help to Buy may not also be maybe so long-term thinking. So in 5 years' time, might get caught up on what they need to pay back. But I agree. Ultimately, sorry, just to close this one, this is a good thing about property, is they say, know your numbers, trust your numbers, right? So don't trust anything else apart from the numbers. So if somebody is considering a Help to Buy scheme, please, I would recommend breaking it down to the very decimal to understand what it actually means and getting the right advice.
Exactly.
With the Help to Buy, you see them a lot on newly built homes in London, outside London. But Pab, you're thinking that one's bad. You haven't heard of shared ownership.
Yeah. Because I guess.
Yeah. I know about.
Because let's not move on to the different. I think the way to think about it for the listeners, there's multiple ways you can get financing for a property. You can either go through the Help to Buy, which we discussed. There's also shared ownership, which you can also research. My favorite word or phrase, Google it.
Let's just at least just give a 2-sentence kind of overview on shared ownership and Help to Buy.
Daniel, it sounds like you're involved in a couple.
You can only be involved in one. No, I'm sharing it because a lot of people have asked and they want some kind of advice. I'm not trying to say don't do it, but I'm saying at least know your options. So shared ownership is if you can't quite afford a mortgage or 100% of a mortgage. So the shared ownership offers you the chance to buy a share of your home, which is typically between 25 and 75% of the home's value, and you pay rent on the remaining shares. So it's kind of, you're paying a mortgage and you're paying rent. And later on, you can decide to buy a bigger share when you can afford to. And this only applies if your household earns 80,000 a year or less outside of London, and if your household earns 90,000 pounds or less in London. As you can see, many drawbacks, we won't go into it, but yeah, that's one. And also lastly, the Help to Buy ISA, which I believe the deadline is November this year. And briefly, what the Help to Buy ISA is, you can save money and the government will give you money. So for every £200 you save, you'll receive a bonus from the government of £50, and the maximum you can receive is 3,000. So for example, if you save 12,000, if you save £200 a month, then you save, is it 12,000? You'll get 3,000 from the bank, or from the government, sorry. So that increases your amount to 15,000, which you can then use that money to go into Help to Buy property. Yeah. But this isn't money you can use for anything else. It's tied to a property.
No.
But if you want more information, feel free to go to helptobuy.gov.uk.
Exactly.
Yeah, if you want more information, don't listen to Daniel. Daniel, you're scaring people away, man.
Exactly.
No, but there are things and people will say, oh yeah, help to buy, you can get on the property ladder real quick. But someone may not really understand that.
No, you need to do your research.
I bought a one bed flat, and someone along the line that is not a potential, is not my suitor right now, but I end up marrying. They've also done the same thing. You want to both now come together. You both got properties, a one bed flat. You're thinking, rah, I really screwed up.
Yeah, no, for sure. I'll say, look, you need to do your research. So
let's start talking about specific ways that we can strategize on how to get. So if we were taking, let's just use an example. If we're trying to do a cash flow strategy, right? So every month we're trying to increase our cash inflow that's coming into our bank account. I think Olu, you already mentioned buy to let. So that's already an option. So I don't know if anyone wants to explain buy to let for the listeners.
Yeah, just a one-liner, simple. If you're purchasing a property with the intention of renting it out, you'll need to get a buy-to-let mortgage. The way you see it is you're a business owner, you're a small business owner, and you're purchasing that property in order to rent it out. So obviously don't do it for your first property if you're living there. You only do it if you're renting out the property. And I think, as we mentioned, the way you'll make money or have some sort of income is either via capital growth or from rental yield. Yeah, and rental yield is just the money you rent out the property minus any cost. So your interest from your mortgage, the cost that it takes you to take out your mortgage, and maybe any maintenance costs that you have to actually do on the property.
All right, cool. So just I think just for the listeners also to understand the very high level process. I mean, there's a lot of intricate steps within the process. But first, as you mentioned, is it's good to know how much money you're playing with, either how much you saved yourself or how much you can get.
Hey, I ain't playing with this money. This is big money. This is not a game.
This is not Monopoly,
Numbers are numbers. Numbers are numbers at the end of the day. Then once you have your finances in play, then you need to figure out what's your strategy. So are you looking to invest long term, trying to increase your capital? Are you looking to increase your cash flows? Then once you've got those decisions, I personally think the next step is to try and identify the right area. So it could be an area, if you're living somewhere, it could be an area nearby in terms of having family or friends to manage it for you, or contacts to help manage it. Or there's areas in the UK where you can invest and there's very, very strong cash flow returns as well.
What are like, maybe we quickly go around. What are the one thing that you look for when it comes to selecting a location or property?
Is that for buying to live or is that for buying to let?
I'll say buying to live. Let's do both, buying to live and buying to let.
Buying to live, it would be, do you see yourself living there? Would you see yourself, for example, if you want to you're looking to start a family in the short to medium term, can you see yourself raising a family? What is the surrounding areas like? Are there good schools, good amenities, transport links, family, commute to work, etc., opportunities? Those are all things I would consider.
Yeah, buying to let would, for me, transportation links, close to sort of amenities, the demand in the area. So other properties which are being let out and they've been successful. So that's really what I'm looking for.
Yeah, I think for me, actually, the first few properties I've always bought it in areas that I'm actually personally familiar with. But I think now, in terms of where I would like to invest in the future, public transport, close to schools, and areas where I know just from a number basis, it's returning a lot on my investment. So I get a lot of money back. And
also just to add to that as well, is areas which potentially have future developments in the plans. So looking at what council is planning to do, making a few phone calls and finding out, okay, they're looking to build a university or they're looking to build a hospital. So these are the things which are going to drive the demand up.
Yeah, for sure. So after you found the property and you've searched for the location, what then is sort of the next step that you guys go through?
All right, cool. So you find the area, then you find the properties, and you book your viewings, as many as you can. Be efficient and try and book viewings for properties that on a number basis make sense. Then once you find a property that you like, you make the offer. Then once the offer has been agreed, then you progress the deal. We can go into the technicalities a bit later. And then once the deal is in place, you can just manage your overall portfolio. If you get the property on your books, and then that's it. From a very high level basis.
So let's dig in. Let's dig into some of those areas, because there's some areas, there's some aspects that the viewers and the listeners might not actually know. So I guess you go and view the property. What are some of the stuff you need to look out for when you actually attend and view a property?
Well, it all depends if you're looking at a new build off plan, a new build that's built, if you're looking at an existing building, if there's someone living there, many different factors.
Someone living there is funny. You might find a squatter boy stepping someone's back. So let's go with the scenario of it's Victorian house. It's not a new build. So I think what you're definitely looking for is any smells. So as soon as you enter the property, does it smell a little bit funny? Damp is a big one.
Damp is a really big one. Yeah, damp is.
Are the floorboards aligned? Sometimes you might find that the floorboards are quite uneven. So these are, and also the biggest one is cracks. So the golden rule is if you can put a £1 coin in a crack that you see, it's probably quite big and the property has suffered from subsidence. Subsidence is where the property is actually moved slightly. So these are probably damp, smells, cracks. And there's many more, but these are things that you can actually see, I think, firsthand.
And what should happen is, especially if you're taking money out from the bank, before they actually accept and provide you that fund, they normally get a surveyor to come and do an assessment of the property to just ensure that the money that they're borrowing to you matches sort of the value of the property that you're purchasing. So sometimes, yes, obviously do your own checks, but also look through the surveyor's report, because they will also highlight some of the stuff that P's mentioned, and they will also say what their estimated value for that property is.
But this part would only happen, the survey would only happen when you've put in an offer.
Correct.
So you found the area you want to live in, you found the property, you've put in an offer. So you told the seller what you're willing to pay and any conditions. Then you have an offer to exchange in 4 to 12 weeks. Could be accepted.
Rule number one. So I can give you a personal story as well. Rule number one, when it comes to making an offer, your first bid should be extremely, extremely low. If your first bid has been offered, you've offered too much. And so even if you're actually looking to buy it to live in yourself or actually buying it to let it out, it's really important that you can get a really big discount up front, because effectively that's what your profit is on paper. So if you want to refinance, it gives you more comfortability with wanting to refinance, because then you can actually look to take out that difference at a later stage. So
you can bid, even if it's a new build, you can still bid. Don't be afraid, because what they're advertising is just the price that the market price. But you can still bid on a new build. So don't take that final price or the listed price as the price they will sell it to you for.
Oh yeah, so that's what I'm going to add in terms of a personal story. So I've learned through experience to bid extremely low, and you'll be surprised at what the vendor, the person that's selling, is willing to accept. A lot of the times they actually put a guide price, or the price that you see there is nowhere near the price that I know I'm going to perhaps purchase it for. My very first property, because I was super excited just to get one, and I wanted to get one before the age of 25. I had lost a few deals based on cash buyers. So when I finally had an opportunity to get one, I gave them exactly the asking price. And so the only thing is,
I thought he was going to say I gave them more than the asking price. You know what I said?
So the fact that the properties in London helps, because the capital appreciation has been on my side. But it meant that from day one, I was not in any profit, right, on paper. So you definitely want to sort of develop some negotiation tactics and go in low, very, very low.
That sounds like a song. Go down low. Go down low. Go down low.
Oh my God, Oliver.
Couldn't help myself. Okay, so after you put in the offer, I guess, what is the true cost? Because there's different elements that you need to get, like your solicitor involved. But what is actually the true cost of purchasing a property?
Yeah, so the first one, I'll just give the first one, is the deposit for the property. So if it's 10, 15, 20%, that's the first big chunk. Then what would you say the second?
No, but I was going to say, once you put an offer and if it's accepted, you have to pay that deposit because it's now legally binding. And you can't get it back without any major costs. So if you're putting an offer, know that it's something you want. Make sure you've done all the background checks, even if it's in an area. Make sure you know about the neighbors, what they do. You don't want to be buying in an area because, of course, every seller wants to sell that property. So make sure you do all the background checks. Do all the background checks. You can't get your deposit back. and then it's usually 4 weeks before completion, which is when you hand the rest of the cash over to get the keys and the deeds, and then the property will be legally yours. But through all this process, you'll need a solicitor, someone to handle all the legal sides of it, from that the valuation to the surveying, and all of the small minor details, because really and truly, this is a big task. It's not something you can do by yourself, or if you can, it will take up a lot of your time and it will give you a lot of stress. So, don't try and be Superman. Pay the fees that you need to get a solicitor, independent financial advisor on board as well. But also at the time, you have to pay for these fees for taking up the solicitor's time.
Yeah.
So you can be spending well over £1,000 just on solicitor fees, plus the deposit that you need to pay, and not forgetting stamp duty. Yeah. And stamp duty is, let me keep my comments for myself, but stamp duty can be a lot, especially on depending on the price of the property. So I think if the property price is under 250,000, you're paying 2% stamp duty.
Yeah.
And if you're paying over 250,000, it's 5% stamp duty.
It also varies if you're a first-time buyer and also you're buying to buy this additional.
Yeah. So if you're first-time buyer, that's 2 and 5%. If it's your second property, it's different. And many you've probably heard, if you're doing a first-time buyer, I think, was it Phil Hammond, that he scrapped the stamp duty for first-time buyers for up to a certain amount of a property, and that was done in, I think, October 2017 or November 2017.
I think Shaw said something quite nicely earlier. He said numbers are numbers. So with all of these costs, it's not to. I don't want to put people off. Actually, I want this episode to have people interested more and look to buy property. So in the end, these are costs associated with transaction and buying a property. Yeah. But then it's also, and they can actually perhaps be quite daunting if you're a first time buyer. But then think about perhaps once this is through, you've exchanged contracts, what you can then be looking to benefit from moving forward. So just to summarize, I would say the deposit for the property, you probably have to pay the lender themselves an arrangement fee for actually preparing the documents and the loan for you. The solicitor fees, it can range anywhere between 750 and 1,000, 1,100. And within the solicitor's breakdown of fees, they will show you what it is that you're actually paying for. Stamp duty fees, and that's probably what is required for transacting. And then there'll be some costs relating to getting the property up to a particular standard, even if you're living there yourself or actually looking to let it out.
Yeah.
Also,
and then the last thing, because this is one thing that people don't always think about as well when it comes to that true cost. I always say, try and have 3 months worth of whatever your mortgage payments are, like your monthly payments are. Because I think what happens is a lot of people take into consideration all those true costs, the cost up front, and then they look at their bank account after they've signed and completed everything, and it's really low because you've obviously made all these expenses, but they don't take into consideration, I've got to now pay my mortgage, whatever the interest or the repayment amount that you have. So just for me as a safety barrier, I always try to have at least 3 months worth of that mortgage interest or repayment, just to ensure that I'm comfortable when I start and I move into that property day one.
One thing you need to be aware of, even when you're getting your mortgage, is knowing the mortgage interest rate.
Yes.
Which we didn't touch upon in great. We didn't touch upon.
Let's quickly touch on it now. Quickly.
But obviously, a high deposit will mean you take out a lesser mortgage amount. So if you increase your mortgage, your own personal contribution to the deposit, you can get a cheaper mortgage. But also, there's something known as a fixed rate mortgage, and also a variable mortgage. So you can have a 2-year fixed rate mortgage or a 5-year fixed rate. Of course, 5-year fixed rate is going to be a higher percentage on interest. A 2-year lower interest. You can also have a variable one that moves in line with the market and economic conditions. So that's one thing you need to be aware of, is how much you want to be spending or paying for your property every month, given the fact that you have additional costs involved once you've bought a property, such as maybe building and contents insurance. You need like life insurance, because of course the bank want you to have protection should you not finish paying off your mortgage, should you become deceased, and also knowing how much your council tax is going to be. because that's something people don't necessarily take into consideration. That council tax can also be very expensive.
Okay.
No, sure.
So before we do the wrap up, a couple of other conversation topics that we just wanted to quickly drop. So one thing to be conscious of is when you're getting a mortgage, most mortgages, they come under two criteria. One is interest only, and another one is capital repayment. Now, to describe this very simply, if you imagine you get a mortgage of 100K, if the interest rate is, say, 2%, during the course of your period of the mortgage, so if it's 10 years, 15 years, 25 years, you would just every month pay just the interest on the amount of mortgage that you're borrowing. So then during the course of that time, you'll just be paying the interest every month. Then at the end of the term, whatever you agree, then you'll pay back the full amount. Now, most of the time when you're investing in property, you go with the interest only option because you're trying to increase your monthly cash inflows every month. Then the other option, which is the capital repayment, this is where you pay back every month interest and your initial 100K in this example every month back, which means you're paying a higher amount every month. But then at the end of the 10, 15, 25 year time, whatever you've agreed, that property is already yours and you don't have to pay anything off at the end to own it because you've paid it off every month during the process. Another topic actually that I think we failed to touch upon is we talked about buy to let. There's also other options in terms of properties. There's also HMO. P, do you want to talk a little bit about HMO?
HMO effectively stands for House of Multiple Occupancy, and it's a strategy that is used for property investors that are looking to buy properties, refurbish the property, bring it up to a HMO standard, hold the property usually for quite some time, for the long term, and it effectively means taking, say, your standard 4-bed, 5-bed house, and trying to find as many rooms as possible to let out. So you may convert the sitting room into a bedroom. Then you convert the bedrooms and you leave the bedrooms as is, and you may convert even a dining room to a bedroom. So you take a usual 3-bed house and turn it into a 5-bed HMO. And as you can imagine, the big benefit there is that you actually get a high monthly cash flow because, to Shua's point, you're usually taking an interest-only mortgage. So you have a very small mortgage each month with a high rental income.
And just to add... Sorry,
and the only drawback is if you think about it, you're having to effectively manage, or the agent's managing it for you, quite maybe a high turnover of tenants because they usually stay on average between 8 months to just under probably 18
I think it's 6
months.
I think it's 6 to 18, yeah.
6 to 18, yeah.
So probably typically university students then.
Yeah, that could be part of your strategy, or you could be working for working professionals, but certainly university students is a good avenue to go down because universities will be here for the long-term foreseeable future.
And then there's just some other quick options also with regards to property is there's also rent to rent. So this is where, for example, if you don't have the money to actually buy a property outright, what you can do to try and accumulate the cash before you buy a place for yourself is you can go to a landlord and maybe someone who is looking to try and rent their place out but doesn't want the extra hassle of dealing with tenants, and you can tell them, okay, I will take your property off the market. I know that it's marketed for £600 a month, but in that property you see that there's an opportunity to run it as a HMO. So you're basically subletting the place. You take that off the landlord to say, okay, I'll give you your £600 a month, but then you can rent out individual rooms within that property, and then you can make potentially, say, 1,200 in this example by renting the rooms out individually. You give the landlord the £600 that you agreed to pay him, and the rest of the profit you basically manage and keep yourself. So that's basically where you're renting to rent out.
And the rent-to-rent strategy is a great strategy for those who are in a position now that are looking to build up their cash in order to actually buy their own property. So what I like about the rent-to-rent strategy, it puts us in a situation where there are no excuses to get onto the property ladder or to become a property investor. If you research enough, there are many different ways. So rent-to-rent is one. The other strategy could be sourcing properties for other investors. So if you understand how to find a property with a large discount on paper, you can then offer that property to an investor who has the money, and in return they'll give you, depending on the price, but anywhere between £3,000 to £5,000 for doing that. So if that's a skill set that you build up, again, it's another form of cash flow. And then the last one also for those that perhaps don't have the money to put down on the property now, which is something to pay attention to, is lease options. So lease options effectively where you can approach a homeowner and say to them, I'm interested in buying your property in the next. You fix an agreement that says I will be interested to buy your property in 5 years from now, because based on your research, you believe it will go up by a significant value. In that time, you basically take over not the ownership, but the management of that property, so you can let it out. So you're effectively letting out a property or getting money from a property that you don't actually own. Mm-hmm. And I think lease options is certainly a very powerful way. It's becoming a more prominent strategy in 2018-19. I think you'll hear a lot more about lease strategies moving forward.
Mm-hmm.
And another thing we didn't mention was about leasehold and freehold.
Mm-hmm.
So the method of owning a property for fixed term, but then at the end of the term, when the lease expires, the ownership goes back to the freeholder, as opposed to the freehold, you outright own the property and on which it stands.
Mm-hmm. And probably the final thing that I had on my list is tax. So tax is a very important thing. But I think we talked about stamp duty, which in itself is a tax. But now the government in the UK, they've changed the laws where some of the expenses that you could claim before to lower your tax bill from a personal name basis, they're now moving away from. So I think in the industry, you're seeing more and more people create a company structure where you're getting mortgages through a company, you're buying properties through a company, and you're also managing them through a company as well. And this has certain tax benefits. You can expense things because you're running essentially a business. So the same way that you would expense, I guess, your travel costs, training costs, etc., you can do the same thing through a company structure with the objective to invest in property. So again, I think we mentioned multiple times on this podcast, none of us are financial experts. I would recommend to speak to an expert, so speak to a good accountant, speak to a good tax specialist, speak to a good mortgage broker, speak to all the right experts, because one essential thing is having the right team in place. I think we all try to do everything ourselves, but something that all of us have probably realized at different phases, if you go to the experts at the right time, then it may cost you a little bit of money now, but in the long term, it can save you a hell of a lot. So have the right team in place, know the right contacts, and then once you have that, the machine is rolling and it makes your life a lot easier, and you can save a lot of money in the long term as well.
Yes, I think we've gone through, and we'll summarize at the end, sort of the different steps, but because it's a little daunting, why don't we talk about some of the rewards for purchasing a property? Because I think we've talked about how, like, the process, some of the costs, but why don't we talk about maybe someone wants to share their experience in terms of reward?
No, I like that. So effectively, I'm into the property game and space for the passive income. So passive income is effectively, most people know, it's where you don't have to work for the income that's coming in versus active income. So it's buying properties to let out to tenants. It could be either the whole house or letting out separate rooms, and then being able to do that to build up a nice monthly cash flow. So that's really the benefit, and something which over time, what I like about, there's a saying, I think it said, property is not get rich quick, but it's get rich slow for sure. So it's thinking very long term, and the process, I think also the process of just building and building a portfolio, which is actually quite exciting.
Exactly. And like you mentioned it perfectly, P. I think for my first property, yes, I think we mentioned sort of the challenges and sort of the stuff that you have to take into consideration. But since I've had that property now for a few years, I was able to do a revaluation, and I was able to see that based on the capital increase of that property had gone up by close to 100K. So automatically now you have more leverage because you have that asset. So I was able to then go into that property, go into the bank and say, hey, I've got this asset that's gone up by 100K. I want to take out 40K, 50K to then be able to purchase another property or use on another investment. By 100%. Yes, it's hard work at the beginning. No one's hiding that fact. But when you go through that process, there's a lot of, obviously there's risk, but there's also potential. There's also reward. It's
also very difficult, almost I would even say impossible, to lose in property over a 20-25 year period. There's a reason why it's the most common asset class amongst the super wealthy, super rich. So that's something which, when you talk about benefits, and also we haven't got into it, but being smart with regards to the tax structure, how you can basically feed your family into it, being direct to shareholders. So there is a number of benefits which And it's, again, I go back to the point of if you're a British national, you're coming from the UK, you definitely want to be in this space.
Yeah, for sure.
100%.
For sure. Totally agree.
So thank you for listening. As you've heard, we spoke about how you could fund or purchase a property, going through saving the traditional route of 10 to 15% of the deposit for a property, or going through some of the government schemes, which are shared ownership, help to buy ISA, or equity loan. We spoke through the process of from buying or identifying a property to the completion of a property and associated costs, and knowing your numbers. And lastly, we spoke about the benefits of buying a property, as well as buying to let a property. Disclaimer, again, all these views are our own. None of us are qualified financial advisors. Should you need any information, please use the World Wide Web. Please find an independent financial advisor to guide you. Speak to your bank. Speak to someone who's got professional sound advice to give you the knowledge and information you need. And also, don't be afraid to ask different qualified people, because many of them may want you to choose them as a mortgage lender. And if you're renting or looking to buy a property, there's no harm in renting to find out if that area suits you, and then you can look to buy it in that area.
Sound like a part 2. Anyways, interesting.
Freedom. And now the bit that we've all been waiting for. Pabilo Timbo, aka the young Denzel with his shaved head. We're ready for this book review, bro.
Yeah, so today's book review is I don't know if any of you guys have read it. It's High Performing Habits by Brendon Burchard. No one's.
No, haven't read it. But you're gonna. Quick side note. For any of our Instagram listeners, Pabilo will kindly give you a copy of this book if you tag us in your Instagram stories. Go ahead.
It's kind of expensive, you know.
Financial.
Good. No. So it's basically the book. There's another book actually. It was seven effective habits.
Yeah, exactly. That one I've read. So
for me, I actually see this book as an evolution from that, and I think it's really well written, really well structured. And what I'll do is I'll just basically share with you the six chapters or habits, and then speak a little bit about each one and what the key message was for me. Okay. So habit 1 was seek clarity. The second one was generate energy. Third one was raise necessity. Fourth one was increase productivity. Fifth one was develop influence. And the sixth one was demonstrate courage. So if I take the first one, it was just basically talking about how high performing athletes or people are extremely clear as to what it is that they want to be in the near future, and how they see themselves treating other people. And the one thing that I took away was they're very clear on how they want to feel in the future. So I tended, before reading this book, I was always focusing on what I actually want to have, what I actually want to achieve. But this helped me focus more on what are the feelings that I actually want to embody. So I thought that was actually quite powerful. It also speaks about how highly performed people are very clear on the skills they need to develop in order to be that person. So very good. I think opening chapter there. The second one was on energy, and Shuo knows this very well, but perhaps can speak on it, which is effectively we need to go from stop managing our time, but to managing our energy. And that's something which I continue to struggle with, but I know it actually is ultimately the difference. So I don't know, Shuo, if you maybe want to speak on your experiences on managing energy versus time.
Yeah, I think. So, for example, if you know that you have peak performance moments in a day, so say you have a big presentation, or you have a social gathering, for example, where you're meeting lots of friends, or even if you're going to a networking event, in terms of managing your time versus energy. So, in those particular periods of that day of the week, you need to be in a high energy state because you're meeting people, you're engaging with people, or you have to present something to a large audience. So managing your energy for that, maybe 2 or 3 hours before that event, you try to ensure that you're doing activities which are relaxing your mind, you're preparing for the event, maybe you're doing some exercise to take your mind off things completely, to ensure that when you get to that period when you have that peak performance required, you ensure that you deliver to your expected outcome. And I think this is important because otherwise people can get stuck, especially in the corporate life, having back-to-back meetings, one after the other, and you're not really managing your energy. You're just managing your time and trying to be efficient. But ultimately, it doesn't lead to the desired outcome. So yeah, no, that's a great point, P.
Yeah, this one here was a really big one for me, and it's the first time I've come across this concept, which was Brendon mentions. It says release. It's called release, set, and intention. So a lot of times, if you think about throughout our day, we have transition points, but we don't actually perhaps use them and leverage them for what they are. So let's say, for example, you've got a meeting from 9 till 10, and you've got a back-to-back one straight after, and the meeting at 9 till 10 was challenging. It was really tough, and it left you quite frustrated. You tend to take that energy straight into the next meeting. Mm-hmm. Whereas what he recommends one does is actually you set your intention for the next meeting and then you release. So it's being very mindful as to what you want to achieve going into your next transitional phase for that particular day. So I thought that's something which it definitely works because it's forcing you to be more mindful as to what you're moving into next. And energy, a lot of the things when it comes to energy is just really practicing more positive emotions. What are the mental triggers to put you in a more positive state? Mm-hmm. The third chapter is on raising your necessity. The one thing that stuck out for me was he says, try to tell yourself when let's say you're in a spot of bother or you're in a situation where you're perhaps losing motivation as to what you want to do. You have to ask yourself, who needs my A game right now? Right, so it's almost making your work bigger than yourself. And if you tend to do, it could be your wife, it could be your kids, but that's something which I think is a great driver to continue pushing through what it is that you're doing.
Is that kind of like prioritizing?
No. It's actually saying to yourself, let's say for example you're I don't know, you're not being the best version you can be of yourself, whatever it may be in the particular hustle or endeavor, and it's basically a prompt to say, who needs my A game right now? Okay. So why should I be on point right now? Because I'm serving my wife and my kids and my family.
So it's like you being in the office and you saying, okay, let me act a certain way because someone could be looking and needs to see me at my best because that might motivate them. Or is that... Yeah.
That could be one, but it's almost like saying, what's your why? Because it's definitely bigger than yourself. Everything you do is...
Yeah.
So it's kind of like telling yourself, I need to be on my A game right now because of X person or because of Y. Because of the students that you're mentoring, right? So this is kind of why you want to keep pushing yourself.
That's why married people put their family on their desk, as in that would be like, okay, the reason I'm here.
I guess so. Yeah, I guess so. I haven't done that. Daniel, have you done that?
No, I haven't done that. But it's funny. It's funny because I was talking to a friend yesterday, and he was saying that there's a woman in his company who has a picture of her husband and her 2 kids. So anytime for any appraisal, people know she's here for them.
Yeah.
So she won't ramp when it comes to appraisal. She like, I'm here and I want my money. I'm getting the money for the family. Basically like that. But no, I don't have any personal photos at my desk apart from someone called Sylvia. But yeah.
So when
I got a picture of you guys on my desk still.
That's kind of creepy.
I love
podcast, baby. Pete, go ahead.
Yeah, and then one of the other points on raise your necessity, he spoke about, and it's interesting to get your take on it. Develop obsession. So a lot of the high performers that we know of, they're very much obsessed with what it is that they do, right? Yeah. And it effectively means it's another way of looking at being a master of your craft, right? And the average person around us would say you're crazy, right? When actually he would say obsession is a badge of honor. So it's and we should ask ourselves, are we obsessed enough with what it is that we're actually trying to work on right now and over the next 5 to 10 years? So I think that's a big one.
I love that obsession line because I think it's great when you mirror it with certain athletes and you watch certain like athletes come up and what they've had to do, and they've said, you know what, either a footballer or a basketball player, they'll be like, I was completely obsessed with my craft. Like I would, like Kobe sort of mentality. I'll be the first person in the gym, last person to leave. And I feel like if you want to be successful at anything, you need to be obsessed with it. You need 100%. To put that time into it. You need to go to sleep dreaming about it, wake up thinking about it. You know, what you got to say, Daniel? I know you got something to say.
I'm smiling because when you said that first one in, last one out, I just thought about uni in the library. But yeah.
Well, no, it's true. He's complimenting you, not taking shots.
Okay, good. You better be. I might not be the first one in. I'm not gonna lie. I was never the first one in.
No. I'm not saying necessarily.
But I was always
seeing people that were first, like coming early, leave late, but they were very unproductive. But
Oh,
Wait,
sorry, Ollie, sorry. I thought we was trying to help you out there.
come on. When does Daniel ever help me out? When
I
is
wasn't
ever
referring
dig?
to you, man. I wasn't referring to you. I was just thinking generally speaking.
Okay. Yes, you have to be productive whilst you're also in. And yes.
On habit number 5, it's increase your productivity. And then just the key things for me that stuck out was one that we've already spoken about. Multitasking does not work. There's actually a really cool exercise that people can do if they think multitasking works. If you want to know more about that, comment for this episode. But the other one was, this is interesting. It says you always, so people talk a lot about balanced life. I'm trying to get the right work-life balance. And it says it's wrong to see balanced lifestyle in terms of the number of hours that you put into whatever you're doing. And it's effectively leading to Brendon does a nice way of saying you always feel out of balance if what you're doing is not meaningful. So if it lacks purpose, if it doesn't drive you, it doesn't necessarily how you try to balance your day, it will always feel unbalanced. So I thought that was actually something which was quite resonated quite well. And in essence, he's basically saying, find that work which is meaningful and has purpose to you. And the very last one is develop influence. And so the thing that stuck out for me was he said high performers in every situation, they go into it looking to see how they can help other people. And then looking to see how they can challenge other people to grow. So great book, really, really good book, because I think it's the evolution to 7 Effective Highly Habits. And one thing that I like about the book as well, it's very nicely structured, but it has these performance prompts. So it has these questions which you can ask yourself as you're reading, which you can actually do on a daily basis. I don't know if I can maybe get a few examples here, but I think this is actually what makes it. 1 second. Hang on. This is a performance prompt when it comes to generate energy. So the things that cause me the most amount of tension each day are, and you'd write them down. A way I could remind myself to release the tension throughout the day is, if I felt more energy each day, I would be more likely to. When I reset my energy each day with this practice, I like to start the next activity feeling something. So, and I know, Shua, you're big on these sort of questions before you go to bed. But it's a really, really, really good book. So I highly recommend it. And Daniel, what was it? If somebody comments or something, I'll get them the book.
Yeah, basically. So if anyone, while listening to the podcast, if you post about our Take Flight podcast and tag us in the stories, then we'll select one winner who will get the book of the week delivered to your address.
I'll be happily, it'll be a pleasure to send that to somebody. Pleasure.
Repeat the name of the book and the author again.
Yes, it's High Performance Habits by Brendon Burchard.
Dope.
If you have any feedback for us, please DM us, comment on one of our posts on Instagram on Take Flight Podcast. Or if you're not on Instagram, feel free to email us at takeflightpodcast@gmail.com. Still waiting for that first inbox from one of our listeners, by the way. P.S.
We haven't received.
Everything's coming through Instagram.
Okay.
But yeah. Thank you.
Cool. Dope. And that's the wrap.
Take off, take flight.